All right, welcome to the market recap for Tuesday, June 24th. Because I was gone all of last week and on Monday, this recap might be a little bit longer as I wanted to go into more detail, but still shooting for around 20 to 25 minutes. Let's jump in with the NASDAQ. QQQ, great day today. Ended up 1.5% after gapping up. Strong close. Typically, when a stock or index tests the 20-day moving average, ideally with a support gap, which is what we had, and we followed it up with a gap up and strong close that reignites the rally. And now that we're right at all-time highs, we have that kind of strength. I could see some panic buying coming into the market as we get back into all-time highs, but overall, just great action out of the market lately, um, especially with that shakeout to the 20-day. Hold the 20-day EMA on a closing basis, gap up. That's a recipe that, if you go back and look at all leading stocks, they tend to have those types of shakeouts and reignite the uptrend. So hopefully that happens again for the indexes. SPY, a little bit weaker, still has some room to go to the all-time highs and a couple gap down zones to get through from there. But similar shake action on Thursday, Friday, good gap up and strong close today. IWO, great action today, gapped over the 200-day moving average, closed at a new closing high from the rally point, and similar action on Friday where we undercut the 20-day EMA, got down to a gap down from the beginning of June, and then we followed through to the upside. ARKK continues to lead, just rising over that 5-day EMA. Any pullbacks get supported at the 10-day, has made a new 52-week high when ARKK is in a nice uptrend over the 5-day, over the 10-day, that's a market that you want to be more aggressive playing long than short and just try to stick with your winners a little bit longer. Same with IWO. When the IWO is over the 20-day moving average, the 20-day is in an uptrend, that's when I try to be a little bit more patient with my winners on the long side. And then Bitcoin, not doing anything wrong. We had a potential double bottom shakeout to the 50-day moving average, now back up through the 5 and the 10-day moving average. Next, we'll cover the 9 liquid leaders. First, we have SMR. This was up 18.4% today. This is the leader in the nuclear theme. We've covered this multiple times, but awesome kind of double bottom base. Broke out on massive volume, the highest volume in over a year. This might have actually been highest volume ever. I'm not quite sure there. But pulled back into the HVC, rallied to new highs, and then on Friday, perfect shakeout to the 20-day into that support gap, and then we followed it with a gap up, opening right on the low, closing right on the high. Uh, really upset with, well, I mean, I was gone, so I couldn't trade this on Monday, but that's the kind of A plus buy point where your leading stock is pulling back into the 20-day for the first time since it's made new highs, and you get a support gap at that area. That's a spot that you have to put some risk on. Unfortunately, I was away from the desk at that point, but great action and what you want to see. Robinhood, to me, this continues to be the liquid leader of the market right now. Made new highs before a lot of the other liquid leaders and is just riding that 10-day EMA higher. Um, Great shakeout after getting snubbed on the S&P 500 inclusion. Really good shakeout there. Trade sideways and now new highs on a gap up and strong close today. Spotify, new highs, higher lows. Not quite a unfilled gap up, but overall just great action. Again, notice a test of the 20-day and a support gap that got supported, trade sideways, and then followed through higher. Palantir, not doing anything wrong. New closing high today. And we have a 20-day moving average and a gap zone. That's a spot that I'll be watching. GEV, new highs today. Higher highs, higher lows. Didn't quite test the 20-day, but got into the support gap on Friday's shakeout, or sorry, Monday's shakeout before closing higher there. Roblox, if it's a day that ends in Y, Roblox is going to be up, just continues to be accumulated. You see that with the rising 5-day moving average. Any pullbacks get supported at the 10-day, and now we're back into a longer term resistance gap. This is from multiple years ago, so not as important of a zone for me. Just have it on the chart. Pull back to the 20-day moving average and gap zone at $93 would be an area of interest for me. CRWV, slight gap down on Monday, very, very tiny. Uppercut and failed at that same spot today, but we still did close above the 5-day moving average on very light volume. This is something that I'll be watching for tomorrow, but that's in the long setup watch list. Zscaler, um, cybersecurity name, higher highs, higher lows. Did close red today, but closed over the 5-day moving average on light volume. Not doing anything wrong. Good shakeout on Monday and strong close. CrowdStrike trades a little funky, but perfect shake of the support gap at that 460 area on Monday. Got through the 20-day moving average, closed strong, and then basically just chopped today on lower volume. Through today's high is buyable. I like to buy CRWV on weakness instead of strength. Just trades a little funky for me, but still an area of interest for tomorrow. So leaders acting great, indexes acting great. One thing I wanted to cover was the NAAIM exposure index. This is taking a look at the exposure of active investors. Typically, when this gets over 95 percent, that's when I start getting a little bit nervous about the market. Right now, we're at 94, so just a touch over or under that overbought signal. And just because we get overbought doesn't mean we can't stay overbought, especially when you get a move on the indexes like we got today, where we had a shakeout to the 20-day and reignited that rally with a gap up and strong close. Once we take out all-time highs, I'm guessing there's going to be some panic buying as late comers to this rally finally throw in the towel, get long, and then we might have a short-term shakeout as we get overbought. But still, until we get kind of confirmation of downside action, a signal or the number alone of the exposure doesn't scare me. In the past, it has, and I've missed out on some of the sharpest moves at the end of the rally, so I don't want to do that this time. But starting to keep my eyes open for some distribution. But what I would noticed was if I go back to 2020, and I've been using the 2020 comparison because it's the only time I've seen a V-shaped recovery like this. When we did take out all-time highs right around June of 2020, we had an acceleration for 4 days. Instead of riding on that 10-day moving average, we started riding the 5-day and even accelerated higher. And then eventually had this really ugly bar down 5%, brought it to the 20-day moving average. And this is kind of the shakeout that I would expect to see here because we have so many good stocks, so many good setups overall. But things are getting extended. Basically, everything has been working. And now you're getting exposure a little bit long at 94% right as we're getting into all-time highs. So this is the type of action that I'm expecting to see over the next week where we accelerate as we get that new high. We get a shakeout for those last minute buyers to kind of get frustrated. Maybe we chop a little bit and then continue the uptrend. Um, I want to go through a couple ETFs here. Solar ETF, and then I'll jump back to the daily recap. I think this might actually be bottoming here. It gapped down on the news that they weren't going to have the solar credits anymore. And just like the best stocks top with good news, the best stocks or the worst stocks bottom on bad news. And TAN, the solar ETF, has been in a major downtrend for multiple years now. Eventually had a big move up to the 200-day moving average, gap down, another move to the 200-day, gap down, but put in a higher low at that 50-day moving average. And for me, this is starting to feel like this is actually bottoming. So if I jump over the daily recap and take a look at some individual solar stocks, we see NXT. I don't have this marked up just yet, but great shakeout under the 20-day moving average, closed just at it. But overall, this is an IPO in that group, kind of getting turbulent at the turbulent zone. So that makes sense. But some other names like SEDG, that had a big gap down on that news, down 33%. But since then, rallied, put in a higher low, and had an expansion bar up today, up 17.8%. And Enphase up 11% today, kind of similar action, massive volume on that down day, but couldn't push lower. And then today we had up 11% back through the 5-day. So solar stocks actually do look like they're starting to put in the bottom. Every time I say that is when the market rally kind of ends. So I am still going to be cautious about that. But overall, let's refresh really quick. Overall, that's good to see another group joining the rally. Next group I wanted to talk about was semiconductors. Another great gap up, open on the low, closed near the high of the day into this resistance gap back from July of 2024. When semiconductors are acting well, I would not be fighting the market. And basically everything else in the market is acting well. So semiconductor stocks that I'm keeping an eye on. CRDO, it's a thinner name. It's burned me in the past with that gap down in 2022, but made new all-time highs today. Another gap up. So pulling into that 5-day moving average gap zone or the 10-day moving average gap zone on a pullback is an area of interest. NVIDIA, the liquid leader of semiconductors, another gap up, open on low, close on high, right near closing highs, just about a percent off its highest close before. And you see just so many subtle gap ups as this is being accumulated up the right side of the base. That's exactly what you want to see. AVGO, the other liquid leader in the semiconductor space, made new highs today, closed at a new closing high on a massive gap up. If the market gets turbulent, a pullback into that 10-day moving average and gap zone and kind of a breakout retest is a spot that I would try to get in at. Other ETF that I wanted to cover is nuclear and LR. Just great response out of SMR. We already covered that, but in the ETF NLR, pull back into the 10-day moving average and the support gap zone on Monday. Reverse strong close over the 5-day moving average, ending the day up 1.1%. Today we had follow through up another 2.6%, and it had the highest closing price since its move up. And if we take a look at some nuclear stocks other than SMR that we already covered, a secondary stock in the group is OKLO. Great shakeout. This is, again, when you have that shakeout of the 20-day and the support gap, that's a very, very low risk spot to get in if you're trying to get in a liquid leader in a leading theme. Unfortunately, I wasn't around the screens at the time, but that would have been that A plus buy point. Now, if we kind of chop through here, get some market turbulence, that 20-day moving average and gap from today's zone at $55 is something that I'll be watching. And then E, a more speculative name in that group, just great action, shake through the 10-day moving average yesterday. Strong close today, up another 10.8%. And then CCJ up 3.8%, new highs, just basically going vertical from 35 up to 70, a double here. Now we're looking for some consolidation. So some other general stocks that I wanted to cover. We'll start with RCL because that's the reason I was gone. I took a cruise with them over the weekend. Super, super fun. Can't recommend it enough. And they say put your money in the stocks and the companies that you spend your money. I should listen to that advice because RCL has been a monster stock basically since the bull market started from 40 up to $280. Pulled back to the 20-day moving average yesterday, held the support gap from the 10-day on a closing basis, and then we gap and make a new all-time high today. Great to see. Coinbase continues to have these ignite bars after that little shakeout through the 20-day, kind of a 2-day close under the 20-day, followed by a gap up, tight day, and then expansion bar on the 18th. Two more tight days above the 5-day moving average, gap up, strong close. This is another name that I believe has made a 100% move, over 100% move since the low in April. And now really looking like a name that could get going. So Coinbase is going to be a focus name for me. And then another theme that's kind of emerging is Chinese stocks. QFIN, you can see we broke out and we closed over this resistance gap. Kind of have a inverse head and shoulders, left shoulder, head, extended right shoulder as we built that pivot out. This was on my watch list coming into the day, but kind of got going a little bit too quick for me. But great close, up 6.1%. There's another Chinese name that's going to be on the long watch list once we get there. Uber, Just a phenomenal acting stock when it comes to support and resistance gaps. I bought this on the 18th as we tested the 50-day moving average for the first time. We undercut and immediately responded to a support gap. So that was my buy point at 82, like trying to get in at 82.25. That support gap undercut probably got filled at like 82.50, 82.60. Uh, Checked my stop loss when I got back to the laptop on Monday, and I missed getting stopped out just by a couple pennies. Very thankful for that because closed well yesterday up 1.8%, and then we had a massive gap up, open on the low, close on the high, into this resistance gap up 7.5%. So this is another example of using those support and resistance gaps to really pinpoint a low risk entry point that you could put a lot of size on. If you're wrong, you're going to be wrong right away. If you're right, you only need to be right on a couple, and you can get very good risk reward, multiples of your risk when they do work. So now I'm just going to be trying to hold the last part of the position. It's a 20% position now. It was about a 35% position when I bought it, um, and then trimmed a little bit today. Last group I want to talk about was the rocket stocks. We have RKLB closed over this resistance gap. I have to clean up this chart still a little bit, but closed at all-time highs. Great sign that this is a risk-on environment. These types of names would not be taking off if it wasn't. And then ASTS, just wanted to cover this in a little bit more detail. Whenever you have a stock that moves up multiple hundreds of percents or thousands of percents, and instead of completely rolling over and dying, it just goes sideways for multiple months. That is a stock that you have to be focused on when it does get going. Once you start seeing those massive volume bars, it reminds me of SMCI in 2024. It reminds me of AMR back in 2022. Study those two charts. You'll see the slight differences between them, but overall the same kind of structure of massive move up, massive consolidation, and then a secondary move higher. This is a ton of volume coming into the name. It's already doubled off the lows of the shakeout. Now we're just looking for any kind of pullback and test of support gap, key moving average to add to that position. Next, we'll go into some long and short setups and wrap up the video there. Long setups, we have NRG, a little bit weaker, but has been trading tight. And this is going to be kind of a good indicator of whether this continues to be a risk on market or if we're getting long in the teeth and need a little bit of a shakeout. But you see a clean pivot there. We shook out under the 20-day moving average, rallied, put in a higher low, and now we're just looking for a move through 155 as a potential entry. Stop under yesterday's low, which would be under the HVC, the high volume close from earnings, and the 20-day moving average. And that's only about a 2.5%, 3% stop on NRG. CLS made new highs today. This is one that I'll be watching for a pullback buy into that 10-day moving average and support gap zone at 132. QBTS has been relatively weak over the last couple weeks, but this is a market where if we start to break into new all-time highs and we get that pure FOMO type market, this is a name that should get through this resistance gap, pop through the 5, the 10, the 20-day moving average, and reignite for a strong move. I don't know if it's going to be the last strong move, but we've definitely kind of shaken a lot of people out, gotten them bored while other things have been ripping higher. So if we do get that kind of last FOMO push before a true shakeout in the market, this is the type of name that can make a big 20 to 30% move in a couple days that I would be using as a performance booster. Want to use this through the resistance gap high at 1550, stop today's low. What would that be? 1470 for a couple percent risk. TME, this was the other Chinese stock that was really catching my eye. I think this, if you zoom out, massive base, started to break out earlier this year in May, rallied through, um, kind of pulled back into the 20-day moving average yesterday, gap up, The gap zones don't mean as much for any stocks that trade on foreign stock exchanges, just because you're going to have those overnight trading. So just because I have them kind of drawn out here, I don't tend to use them for like Chinese stocks. Biotech stocks are another one that they're not very useful for. But just wanted to kind of keep those zones in my mind. This is one that breakthrough today's high or another tight day followed by a breakthrough today's high could be a buy point versus the 20-day moving average and that $18 spot. Toast, this has been on our radar for multiple weeks. We've had this double bottom base, broke out to new highs on earnings, and then went through kind of a relative weakness phase while it was just consolidating, not doing anything horrible. Had a couple days under the 20-day moving average. Yesterday was the true buy point as we came into the support gap zone under the 20-day. That's your very, very low risk buy point and your best risk reward. Again, unfortunately, I did not take that. We had a gap up today, strong close. Now I'm just looking for a higher low pullback, allowing that 10-day EMA to catch up. Looking at that low of the gap up from today at 43.40 as a potential entry point. MODV, this is a pure speculative play just because of the type of market that we're in right now. These are the type of names that can give you a performance booster. I covered QBTS a little bit earlier. That's this is QBTS on steroids for potential. Um, $3 stock, very thinly traded name, but just looking for a breakthrough today's high, stop at today's low. If I'm going to be wrong on this name, I'm getting out immediately right away. But if it can turn up, this is a name that's already gone from 90 cents to $3.80. Holding that 10-day moving average on a closing basis could get really, really explosive if the market's going to go through that last FOMO phase. Vive, a little bit more wiki of a name, like a lot of up and down wicks, but um, overall weekly base very, very strong. We broke out on earnings, has been basically trading tight while the 20-day moving average catches up. Inside day to day, we keep getting rejected at this resistance gap. So one thing that I would like to see is like an actual undercut of the HVC and the 20-day moving average to really thin out the last weak hands. But this is one that you could buy just breaking through today's high. Stop would be the HVC or the 275 area, right around that 20-day moving average and pull back low. It's going to be a name that I would put lower size on just because it doesn't trade as uniform, but because of the weekly chart, it has a lot of potential. And I just wanted to put that on everyone's radar. CRWV, second close above the 5-day moving average on lighter volume than the previous day. We did get rejected at the resistance gap, but I'm looking for a gap up, opening range break, and just try to play this for momentum burst into new highs. When a name's this extended, I always want to stay on the right side of the VWAP. So if we rally in the morning and then lose the VWAP, I'm out. I'm not trying um, to hold this for a longer move. This would be a pure momentum type play. But I like the shakeout yesterday. I like the tight action today. Now we're just looking for a gap up, opening range break to have that last momentum burst. TEM, looking for a breakthrough today's high and yesterday's high. We had that shakeout through the 20-day moving average and then strong action today. It's a name that's frustrated a lot of people. And of course, it has to do that one more time with the shakeout. So looking through 60, what would that be? 68.80 as a potential entry, and then stop would be today's low at 65, put it at 64 and 80 or so. APLD, another type of performance booster name, kind of just pulling back into that weekly base breakout area. So we have massive base, multiple year base, pulling back, undercut the 20-day moving average on Friday, closed below it and the HVC yesterday, followed it up with a gap up and closed at that 20-day moving average today. This is the type of name where in a strong market, it can get going for a nice 20 to 30% move very quickly. So something that I would want to be buying on strength versus weakness. PLTR covered this a little bit earlier, but pull back to that 20-day EMA and gap zone at 132. That'd be a breakout retest as well. So if the market has any turbulence, that's the area that I'm spotting for a little bit larger positioning. And then finally, last long setup, AS. This is one that we had on the long watch list for a while. Uppercut the resistance gap, and I was in it at this time. Got stopped out for about a 1.5% loss as it lost the HVC. Since then, it came into the 20-day EMA, got supported on a higher low, pushed through today, closed above. I'll just be looking for a test of the HVC, stop at the 5-day EMA, 10-day EMA right at 36.75 as my stop, and then hopefully we can get going here. This is a retail name, so not tech. Um, Kind of gives us a little bit of different exposure in the market. And then even though we're in a super strong market, I do have some short setups, not so much to play, but to keep our eyes on. If we see a lot of these short setups actually working to the downside, then that's something that we have to take note of. Hey, short setups are starting to work a little bit more. Maybe we put some exposure on the short side on some of the weakest stocks in the market, balance out our portfolio, and be ready for any market pullback. Does not mean that I'll be taking these trades, but you can use them as an indicator to kind of gauge the market strength. GRRR, this is one that had a long stretch of relative weakness. Eventually, in a strong market, relative weakness will turn back to the upside. We had that from a move from $17 up to 27, but we had a gap down on Monday. We rallied into that zone and got rejected today. Looking for a lower high, but basically another rally into that resistance gap at $24 as a potential entry, and then the stop would be the high of the resistance gap at 25.40. LAES, another very speculative name that had a monster move back in December. Looked like it was going to break to the downside, but the market has just been too strong for that. So we had a move from $2.40 up to 4.50. So basically a double. Since then, two gap downs. Today we rallied into the upper resistance gap, failed there, closed below the second resistance gap, and at the low of the day. This is one that would need a little bit more work for me to actually take it as a short. But like another potential test of this resistance gap or an uppercut and failure at $4 and then a loss of VWAP would be an entry versus whatever the high of the day is. MMYT, another name that's been on the short watch list for a very long time. Think this is still a stage three topping phase. We lost all the key moving averages earlier this year. The 200-day moving average is now starting to slope down. We gap down on earnings, rallied up to the 20-day EMA today, uppercut and failed there. This is another one where if we rally a little bit and get into that area, a loss of the VWAP could be your entry versus today's high. It is like a little bit slower moving name compared to the super speculative stuff. But I like that because if this structure truly does break down, it's going to be pretty smooth on the way down. If you take a look at ANF's chart, it had that monster stage two uptrend, a really big stage three, broke down on volume, and then started to roll. The market's a little bit stronger than it was when ANF broke down, so that's why it doesn't shock me that this has rallied after that earnings gap down. But the rejection of the 20-day moving average still shows me that there's sellers in this name. HIMS, kind of a tough name to play with because there's a lot of news around this. So personally, I'd only be taking intraday trades on this, but looking for a break below today and yesterday's low as a potential short, and then stop would be like an intraday point. But this is one that a lot of people got long up in here. And if they're stubborn traders, they're probably trying to buy the dip. Every time you get a mini rally and a lower high, that's going to be a potential short there. RCAT, another speculative name that has a gap down after its rally highs, lost the 20-day moving average, had a bounce day yesterday and rejected at the 20-day moving average today. Breakthrough today's low is the short versus that 20-day moving average at 752. CEP, I do have a short position on this. It's really small, about 2% of my portfolio. But this is one that had a monster move from $10 up to $60 basically. put in a higher low, and then this was your do or die kind of breakout point. And instead of breaking to the upside, we failed with a gap down, got kind of tight at the 20-day, closed under, lower high, and is really starting to rotate down. A break under 30, and this could just completely collapse and really start to accelerate to the downside. BFLY, another speculative name that just couldn't quite get going while the market's been hot. Rejected at that 200-day moving average, which has been rising for a while now, and now really starting to accelerate to the downside. A break under $2, and this could just crack down to 160. And then VVPR, still have a short position in this as well. This one's a little bit bigger at like 8%. Awesome kind of kill bar here where it was down 37% after being up like 15%. We undercut the 20-day moving average, rally back up, put in a lower high, and then basically lost the 5-day, then lost the 10-day, couple of tight days, lost the 20-day. And now we're starting to accelerate to the downside, which is exactly what you want to see if you're short. So that's going to be the market recap for Tuesday, June 24th. Again, I think the market is extremely strong. And until we get evidence that that strength is gone, I want to be playing from the long side for the most part. You can take a couple short trades on the very, very weakest names that already have gap downs, but I'm going to be playing from the long side for the most of my positions. And I think we're probably going to get that acceleration into new all-time highs like we saw back in 2020, followed by a pretty sharp shakeout. So I'm open to anything at this point, but until we get that evidence that the market's going to be pulling back, I wouldn't be too aggressive shorting. All right, hope you have a great night, and I'll see you in the next video.